And welcome to our Capitale. Thank you very much for joining me. It's currently Sunday, 2200 hours, 54 minutes gone past. I'm not sure if I said that right, but oh well, who cares? London time, by the way. We're enjoying a very, very hot summer. And it's not due to global warming. Do not believe that, people. That is another scam that they're just trying to take your freedoms, powers, and your wealth away from you. So just be careful of those things. Anything that they say that you need to put money into is probably a scam. Just like everything else in the world. But let me not rant on. Let's go on to our topics today. So what I'm going to be talking about today is mainly the recession that everyone's talking about. The 2-year and 10-year yield curves inverting, which is normally an economic indicator of a recession about to happen or really coming soon. So this is the 10-year yield, and as you can see here at the bottom, there is look at this. Don't worry, I'll get a full version soon. I just haven't got around it at the moment, even though it's very easy to do. But you know, when you just put things at the back of your mind saying I'll do it tomorrow, I'll do it tomorrow. Yeah, that's me. That's far. So here is where we are. This is the weekly chart. This is the 10-year yields. And if you're just looking at this like a normal trading chart, you know, you see there's a double bottom there. And it's a bit like that. You see that? So basically this is what people are kind of looking at. But obviously this, as the yields, is heavily driven by fundamentals as well. Panic especially. So what people need to remember is, with the reason why these things are important, the US dollar is the world reserve currency, meaning that any country that literally buys anything across the borders, somehow way the US dollar is going to be involved. So a country doesn't have to be directly involved with America. So they don't have to be directly, like, let's say, for example, if a country was buying most of the stuff or trading most of the items or goods with America, and then America has a downturn, then obviously that country will feel the pinch as well, because they won't be trading as much with the United States. But since the world is the since the currency is the United States dollar, which is the world reserve currency, which every currency is backed by, which the US dollar is backed by nothing, as it gets printed out by an basically a private company, which is the Federal Reserve, which basically everyone knows in this day and age. And if you don't know that, the Federal Reserve Bank is a private company which prints money out of nothing and lends it to the US government at interest for the US government to pay back money which does not exist. If I give you £1 or $1, and then I take a piece of paper and then I write it down. Here's my pen, okay? And I write it down. So I say, this is worth 10 cows, okay? So I'm going to give you this piece of paper, and I'm saying this is worth 10 cows, but you have to give me back 12 cows, okay? So like, let's just, okay, maybe using cows is a bad analogy because you can breed cows, okay? So this money, okay, so I'm going to call this the cow currency. Alright, so I've got 10 cows, which is the currency that I'm calling it, which is cows. Alright, so 10C, and then I print this. So I'm just literally write it down to you, 10C. Okay, then I'm going to give you 10C, you give me your house. And then if you want your house back, or like, let's say if I'm loaning you money, so you give me your house, and then if you want your house back, you have to give me 12C. Where are you going to get the other 2C from, the other 2 cows from, when I'm the one, and I'm the only one who can create this money? You're going to have to borrow more. So then now you're going to come back to me and say, can I borrow 5 more C so I can pay back that 2C interest? Or not, but then now that interest has now got to 5C. So you're going to have to borrow more and more and more. You can't pay back this debt that all countries in the world. This is why they call it a global economy. We live in a one world government right now, basically. I'm not talking like a conspiracy theorist person. I'm just talking in real terms, okay? The government, the world currency system is under one currency, which is the US dollar. If you want to trade internationally, you have to go through the US dollar. Alright? In Australia right now, they've put a ban on transactions over 10,000 Australian dollars, meaning that you're going to have to use the banking system to purchase items over 10,000 Australian dollars. If you want to purchase a car or things like that, you can't do it by cash anymore. They're phasing out this system. So you're thinking that these inversions, these recession news articles that you keep on hearing about, you think this is, oh no, we've hit a recession. This is all done by design. It's all fake, people. Alright? It's all fake. So, let me just move on to some news articles here. Alright? Look at this. Donald Trump is willing to suffer a 2-month recession if he can beat China on trade. Now, if you just look at that article right there, just the headline itself, because I do read inside the headline, but obviously the headline practically tells the whole story. You know, this is basically saying that Trump knows that China is going to play hardball, and then they're going to put the US into a recession because obviously the US relies heavily on China at this moment. Look in your house right now, and it's not just the US; it's most areas of the world, especially the Western world. Yeah, like we gave China all these free jobs for nothing, and then that's why they can produce a hella amount of stuff because they've got at least 100 million slaves. Communism. They've got people out there working 15-hour shifts, 20-hour shifts. They've got suicide nets outside the workers' buildings. And then you guys think Amazon's bad working. Come on, give me a break. Alright, people. So China has got 100 million slaves minimum. They've got 1.6 billion people, I know, but a bare minimum of a pure slave, 100 million. That's 100 million slaves, people. Okay? These are 100 million people who just build anything for free and not get paid by it. Alright? So, this means that China, they've definitely got the power to do that. And then you're now getting Google, Facebook going over to China and helping China against Hong Kong. You know? Like, look it up. Like, you'll see that Google is suppressing the news which goes for the Hong Kong protesters. Literally suppressing it and promoting the Chinese news, the Chinese state media run communist news. And then you people still think that these companies are still free. These companies are owned by the CIA and people like that. So I'm not going to go into deeper about that because I'm going to start sounding like a conspiracy theorist. But even though that this is true, you know, it's just sometimes you have to look at your own plans as well. And then now we're going to like Brexit. Trump dangles very big trade deal in front of Brexit Britain. What you also have to realize is America is one of the biggest trading partners in the world, yes? And obviously America is Britain's special partner or special ally, special friendship that they currently hold. So, in my own opinion, Brexit is the most logical way to go forward. Because there's no way in hell that even like the British values to be governed by someone in Brussels who was not even elected, telling us what to do in this country. Like, come on. I don't really go for that, and I wouldn't want my children to go through that. I don't want my children to spit on my grave, you know, once they find out, oh my god, my parents were sleeping. What the hell were they doing? They literally gave our country away. No, that's not going to happen. So this trade deal. I'm not going to go into deep about this trade deal because what normally happens is when these people start talking about, yeah, I've got big deals, trade deal, the specifics of the trade deal will never get released. So they'll just like release some jargon to the public saying, okay, this is what, blah, and all that. But then this one's now this one is what kind of shocked me. Like, central bankers face political shocks and hope to avoid the worst. What? But you central bankers, like, these guys own the politicians. They own everything. That's why they never go to jail. Like, the people will never go to jail, the bankers. Truthfully. More politicians go to jail than bankers do. Fact. That's a fact. Bankers don't hardly go to jail. You heard about that bank in Iceland where they put like a couple of bankers in jail, but some of them they're just living off. You know, they were just alright. So like, look at what happened here then. What became clear at the U.S. Federal Reserve's Central Banking Conference in Jackson Hole, Wyoming, over the past couple of days is that not only do other people hold the wheel, some seem intent on steering toward trouble. Oh my God. Like, this is it's very sad, you know. It is very, very sad. These people are the ones who actually run what we actually do. And we fail to see what's actually going on. Huh? It's the central banks who control the system from the get-go. Give me control of a nation's currency and I care not who writes the laws. You think that's a joke? Look, if I had control of the currency of the nation, and then you came to me saying I'm going to expose you, I'll just say to you, okay, I'm going to print you out of existence. I can literally print as much money out of existence. You out of existence. If you're a big billionaire and you got some big business, I can easily control you. I can manipulate the currency, making your business not even valuable, driving the value down. Then I'll just buy it up with the fake 10 cows I've just created. I've just written down. Here's my pen. I'm writing down a new currency note of 10 cows so I can buy your business, since I've driven it down to 8 cows now. So I'm going to buy it from 10 cows with the money I just made. This is how they work. You think when you go into a bank and then you're getting a loan for your mortgage, you think that they're giving you money from the bank vault? That's not happening. They're literally typing money in on the keyboard saying, here you go. Thank you. You know, like, people, it's just shocking. Like, all this information is out there, but obviously I do understand why not many people know about this. It's not taught to us in school. People are too busy. No, people are not too busy. People are being kept busy by these long hours of work. Because 100 years ago, 90% of people were self-employed. Now it's vice versa. Now I'm probably like 5% or 3% of people are self-employed, probably, like truly self-employed. You know, there's no room for anything else now. Even the baby boomers, they're now acknowledging that, okay, you can't just go and with bootstraps up, work hard and then save up. You can't do those things no more. Things are too expensive. I think they even realize now, oh crap, I think we spend a bit too much. And then now, because I'm a millennial, so my generation, I'm not the typical millennial, but yeah, my generation is basically paying back what the baby boomers borrowed. And then the generation that comes after us, they're going to be much worse. So they're going to be the poorest. That's far, unless things change. So here is someone from the Fed. Okay, let's hear what she has to say quickly.
And I think we're going to be listening to a whole bunch of Fed speakers here to see, are they in tune with where the market is, calling for all these rate cuts? Esther George, clearly not. Here's the second part of the interview we did, where I began talking about two things. One is, why are U.S. interest rates so much higher than the rest of the world? And second, what does she think of all this $15-16 trillion of negative interest rates around the world?
It's incredible, I think. It is part, I think, of an experiment that we're watching to see whether negative interest rates will have the stimulative effect that central banks are looking for.
Could the United States have negative interest rates?
I would never say never. I don't see it for the U.S. right now. Remember, we already have real interest rates at zero right now. If you think about where inflation is and where the current federal funds rate is. So policy is not tight, in my view, in the United States. And I think as the economy grows, I don't see a scenario for that right now.
What kind of signal are you getting from the yield curve being flat and briefly having inverted on the 210?
So we all know what the history is of inverted yield curves and the concern that they portend a recession coming. I think I look at that very carefully to try to understand why are we seeing that. But in the context of a global economy that is weakening, I think that could be explaining part of it. I think the Fed still has a large balance sheet, and that could be putting some downward pressure on those longer term rates. So,
just to pause right there real quickly, when she said the Fed has a real large balance sheet, the Fed does not have a balance sheet. Okay, people? That's why the Fed has never been audited. Ever been audited. No one can go and look in the Fed's books and say, can I see your books? And then check if everything's legit. They've got nothing. These people are just sitting there because I would not be surprised if this woman is just an actor. You know, there's a lot of actors around there. Okay, like, how can you trust an organization which has never been audited? It is not subject to any laws. How can you trust an organization like that? And then this very organization is the ones, are the ones that give us this currency, this fiat money system thing, whatever it's called, and they call it capitalism. Okay.
I'll keep watching that carefully for sure, but I don't yet see the signal that suggests it's time to get worried about a downturn.
Why are United States interest rates so much higher than, say, Europe, where they're zero?
I think if you look at the underlying performance of those other economies, you will see that the U.S. is performing better than, for example, Europe and other parts of the world, and that accounts for why we have higher interest rates.
So you worry that we're too far above other major developed countries?
I don't tend to think of it that way. I tend to think that those rates in the U.S. are reflecting the underlying economy here. The interest rates in other countries, likewise, are reflecting that. And to address that issue really requires other policies in those countries, whether it's fiscal or monetary, to really affect that growth.
Did you hear that, people? She said something but nothing at the same time. Oh, let me take this off. At the same time, so you can't really trust these these people anymore, because it is an old trick, you know, when things are all done by design. Because like, this is how I watch the stock market. I literally look at the stock market like it's a game, you know. And then in a game, there's some people who cheat, and some people want to play the real thing. But I try to find out how the game's actually made. You know, what moves, like what's gonna affect who, when, how. Like I said this last time. So we just saw in that little video there saying, oh no, it's gonna be alright. It doesn't really mean it's gonna be a recession. And now look here, yield curve inverts once again on fears the Fed won't save the economy. What? The Fed won't save the economy? They're the ones who created this mess in the first place. Okay? So it's just really difficult, because there's no way of avoiding a recession unless you print it off, and then, you know, it's like giving food to a wounded animal which is about to die. Like, what's the point? Just chop it up and sell it for parts and then start again. And that's why I believe that well, I'm not gonna say it like that, but Trump is probably trying to do that right now, like start a new system, getting everyone ready for the new system. But they will not go there right now, because all I do is look at charts and I look at news articles and I try to compare which is the best thing to actually do. So when I'm looking at the DXY, like when I saw it last week on Friday, and I'm pretty sure that most of you caught that. Look at there. Okay, people are screaming recession. This is a panic, people. This is not really the real thing yet. This is people panicking, alright? Because, yeah, dollar could go down further, but then let's do this now. Let's see where the DXY is going, okay? The US dollar index, alright? I'm not sure if I've done some analysis on this before, but let me do some now here. So then, obviously, so apologies, my mouse is really playing up to me. It's like it doesn't want me to do all this work. There you go. And then that's our first batch there. And because I like drawing these support and resistance lines, just where I know it's pretty obvious where the big guys are getting in with all the big cash. So then I can kind of see where the turns are here. So like obviously this is the dollar index, and people are going to try and see, okay, where is it going next? It's kind of hard to tell. But then if I was someone trading the dollar index, this mouse is really annoying me now. So then if I was practically someone trading the dollar index, and then I'm looking at this right now, I'm thinking, okay, where could this go right now? So where I could find it going is obviously the most logical thing that everyone probably do is, okay, we'll come off the trend and then come off there, or because of the news that's going on right now, people are going to just carry on selling it, probably putting the stops above the previous highs. So the conventional way is, okay, it's going to hit the trend and then go back up. All right, that's the conventional way about it. Or it might hit the second trend right here, go back up. Okay, or it might just carry on going south with your stop loss at the previous highs, and just because you're seeing the news that, oh, recession's coming, let me sell the dollar. Like when a recession comes, you don't do it during the recession. Like you don't enter the market during the recession. You enter the market after the recession, and where the bottoms are. You know, I don't understand when people say, yeah, I want to catch the recession and then sell the dollar during the recession or sell whatever during the recession. Like why would you do that? Like the recession is a transfer of wealth. You know, so you get it out after that. So you get in after the event has actually happened. Like buying the bottoms back up. Okay, that's what any sane human being would do, because everyone knows that it's a bubble's burst and then another bubble is created. So when the other bubble is being created, you can just join in, and you'll be all good, you'll be all gravy. So then for the DXY, what I'm looking at here, either going people either going to short this and then just carry on going down. But then this is what I think is going to happen. Okay, what I think is going to happen with the DXY, right? It'll probably go a bit further down, but then I do see it turning. I do see this turning for some reason, and it's kind of a difficult reason why I see it turning, but I've got a huge number of different factors. But if we're just going purely off the technical analysis point on the chart here, yeah, I can just see this dancing, because what you have to like remember is the recession is not going to happen now. It's not going to happen this year. Okay, so all this recession talk and trying to sell dollars, that's not going to happen. All right. So here we can see that it went lower than the previous times here on the support. Okay, and then you could even say that this is another support as well. Right? So here I will only be a buyer. Okay, I'll only be a buyer at one of these levels here. That's the only time I'll buy. At one of these levels are the buy zones, you buy going up. This is a buy market at the moment. And until I say, okay, I'm not buying, let's start looking for shorts, or let's wait, this is going long at the moment. So like, let's just check on gold and then see how gold done. I'm pretty excited about gold as well. Let's take a look. Oh my god, what did I say on the previous gold video? Obviously it didn't go the way I intended to, but look at what it's doing now. It's going north, you know. And obviously this is just people, but by the way, the recession has not started yet. This is just people being scared because of the yield inversion. Don't worry, Okay, the recession might come this year, all right? Because if it does come this year, I'm gonna look like a right, you know what? But then, in my own opinion, I don't think the recession will come this year. The recession will probably come 2020, 2021, but it will be only for a short space of time. That is what I can guarantee. Short space of time, like recession, nothing long about it. Let me just go back onto the DXY and check if that's coming. Obviously, the market has opened. Look at that; it's open right now. Okay, so like let's wait and see if this travels north and see what will happen. So right now for this week, I'll be mainly looking at gold. You know, let me look at silver as well for you people, because silver obviously is gonna go very similar. I'll be mainly looking at gold and silver because of all the hype talking. So right now I'll be trading against people. I'm not really trading against like the actual technical analysis because I know what people are gonna do. What's gonna happen here is okay, price might come back down, but when price comes back down, it's very likely to go in the middle, and then obviously, okay. So during this midpoint here, anything could happen. I go sideways and then shoot up like that, you know. But what's gonna happen is if price does come back into this zone, it's gonna shoot straight back up again. It's not gonna carry on going south. Because right now we're in those times where people are playing around with the metals, but then they're still investing in them. So it's not like they're switching all their money out of the metals. Because like now people are gearing up for a recession, so they're trying to change all their money into like things that will store their value instead of stocks. So you take all your money out of stocks, hence why the recession happens because the run on the stocks in there. So you take all your money out of the stocks, put them in the metals, then after the recession, switch the money from the metals back to the stocks, but keeping some in the metals. That's why metals always gains. So that's how people usually do it. So what they do is take the money out of the stocks, put them in the metals. I know I'm repeating myself, but I just want to be clear. Money out of the stocks, into metals, recession happens. After recession, take money out of the metals, put them back into stocks, let that grow again, while keeping a slight percentage in the metals, so then your wealth stays, just in case if anything happens. Then rinse and repeat, rinse and repeat. This is how wealth distributes, and then this is why the wealthy get wealthier. That's why they don't teach you none of this in school, because if they did, you'll all be rich, and then the market would just be flat. We need winners and losers. So this is what I believe is going to happen with the gold. Sorry, with the silver. Gold. I've already said what's happened. We've seen what's happened already today. It's just going north. It's just fucking skyrocketing. And I did say last week that the gold is overvalued. Sorry, it's undervalued. It's very late. I know, long time. So yeah, this is just my analysis going into the week. So just concentrate on the metals and the US dollar as well. Also to do with Hong Kong. Let's go on to not the Sudanese. I want Singapore. Okay, as you can see here, look at this. This is the Singapore, and let me show you the Hong Kong. Look at what's going on in Hong Kong, especially. No, it's not the Hong Kong. Okay, Hong Kong long, USD Hong Kong long. Okay, and then I'll go USD SGD, which is Singapore short. I really hate it when it does it to me. I know it's going long now, but watch what's going to happen. Okay, this is the USD. Okay, if I'm wrong, I'll be wrong very quickly. This is what's going to happen. It's going to go up, and then it might try again and then go further, but then it will eventually break down back to here. This is what's going to happen with the Singapore dollar. Same thing with the Hong Kong dollar, but just the reverse. So you go long on the Hong Kong dollar and then you go short. Well, like not long on the Hong Kong dollar, but like long USD versus Hong Kong, and then short USD versus Singapore, because there's a lot of money going into Singapore at the moment. So yeah, there'll be a certain drive going on. So let's just watch this out. I might be wrong, but let's see. Like this is how the market works, you know. So the big guys have always got the big money, and me just being a normal retail guy, you know, I'm just trying to figure out how all this works, which I am kind of figuring out. But all you have to know is the game plan. What is the end goal of all this, and then just work your way back, and that's how you can find out what they actually did. So, yep, people, this is, yeah, all really that I've got to talk about central banks, the yield curves, about how the recession is not going to come now. If it does come, it will be a very short and small recession. It's not going to be like 2008. They can't afford that at this moment, probably next year or the after.
My name is Kevin Dalton. I am the Vice President of Global Engineering.
What's that? Sorry about that, people. And yeah, don't believe what the central bankers are saying. They're the ones who run the whole system. And in terms of Brexit is literally up in the water at the moment. Anything can actually happen at this moment. So as you can see, Trump saying that, you know, don't underestimate this Trump guy, people. Don't underestimate him, because I used to do that, and then I actually started looking at his record, like his presidential record, and it's really kind of good, you know. Like I'm actually not lying. I'm not following what the media is saying, obviously, but when you just look at his record and see what he's actually done, it's actually surprising. It's actually coming up to be really, really good. So let's see what can happen on here. Even though I do understand that everyone's a puppet, but maybe like this has got like some inner war going on, some deep state inner war going on. You know, that would be really nice. I would love that, to be real. But yeah, this is just a quick recap. During the week, I'm gonna go more in depth with what I've been looking at. I'll be probably concentrating more on like the yields, DXY, precious metals, and what's going on with the Hong Kong and Singapore. So that's probably gonna be my watch list for the week. Thank you very much, people. Have a good week, and I hope you make some profit. Goodbye.
The revolution will be live.